Now, friends, let us start with the discussion with respect to the business income. Friends, this particular business income as a chapter, one of the very important chapter from examination point of view, because anywhere any good computation coming, some adjustment of this business income chapter will be there somehow or the other. It will be there. So we may not expect one direct question on the business income, but the provisions of this particular chapter is so important that it will help us in computing income for many separate different chapters altogether. Now, friends, see, in the business income chapter, hardcore basic things, let me just tell you that how it works and all that. See, profit and loss. Okay, profit and loss. You have expense, you have income. Supposing 100 income, expense 70, and 30 is the profit. This is your books of accounts. Okay. In the books of accounts, your ultimate objective is to get the appropriate amount of the profit. You get that particular profit, and thereafter you basically close the books of accounts. Now, the taxation law also wants the profits, but we call it as a total income. We call it as a taxable profits. Okay, so our income tax, business income is also doing the same thing only. Income minus expenditure, and what you get is a net income which will be subjected to income under the head business and profession. Okay, but what we want is all the incomes which should be as per the law, all the expenditure it should be as per the law, so you will get a profit as per the law. So what are the types of income which are taxable? Okay, so as per the law you have to include that, and what are the expenditure which are allowable as per the law, that you will have to consider that. Okay, now say for example the income in the given case as per the law taxable is, say for example, 110, say for example. Okay, and out of the expenditure which is 70, say for example, only 60 is allowable as per the law. Okay, this is as per the law. Okay, so what you can do is you can do the same thing. Okay, that my income is 110, which is now as per the law. The expenditure is 60, which is as per the law. Okay, and the difference is your income, which is as per the law. So as per the books of accounts, your income was just 30, but as per the law, the taxable income under the head business is 50. Okay, this is one way. I normally call it as a direct way of solving a question, where you know all the expenses, you know all the incomes, and you can say income minus expenditure, which should be as per the law. Now, there is another way of also presenting the answer, which is very popular under the tax law and which is practically followed by every person, and even department while doing the computation, they'll follow this particular system. So what they will do, they will start with profit as per P&L. Okay, so my profit as per P&L is 30, and to the profit as per P&L, they will do the add less adjustments. I repeat, they will do the add less adjustments depending on the situation. Now, for example, as per the books, the income was 100, but as per the law, the income is 110. So they will say that as per the law, the difference is to be added as a taxable income. So they will just say that this is more taxable income. So to the profit and loss, they will add that much of figure. Okay. When it comes to the expenditure, see, 70 was as per the books of accounts, but as per the law it is only 60. That means there is a disallowance of the expenditure, so certain expenditures are to be disallowed. Okay, and therefore I'm going to add that particular expenditure, and ultimately I will derive my profits, which is, say for example, 50. Okay, so it is only the method of the presentation that it is 30, start with profit as per P&L. That means when you say profit as per P&L, all the debits are considered in the books, all the credits are considered which is in the books, and to that we will do add less adjustments at the appropriate places and get the amount of the profits. Okay, so these are the two of the most best suited way of presenting the answer when it comes to the business income. Now, some of the questions may give you a full data. For example, they may give you full profit and loss. See, for example, if you come to this particular question, see, for example, this is our initial question in business income. Now, if you see this particular question, you know all the income because separate profit and loss has been given, and you know all the expenses. So here you can follow very simple income minus expenses. This is how also you can do the answer presentation. Or you already know the net profit, so you can also do other way around. You can start with profit as per P&L, and to that you may do add less adjustment. The presentation wise, I repeat, the presentation wise, whichever way you solve, the answer is right. Okay, it depends on what kind of data is available to you in the question format. Now friends, just come to this particular page. Okay, and yeah, this is your page. And before I start with this particular question types, let me explain the hardcore basics of the business income first of all, and how exactly that we are going to approach this. Okay, before I start with these particular questions. Okay, see, the business income chapter as a chapter by itself is divided into the group of sections which we call it as section 28 to 44. Okay, 28 to 44. Okay, this is the group of sections for the business income chapter. Now every first section of every chapter is the charging section. I repeat, every first section of every chapter is a charging section. Charging section basically will tell you that what exactly is the types of income which is specifically covered and taxable in this particular chapter. So this is charging section. Okay, then next group of section is section 29, basically 29 to 36. Normally I write 30 to 36 because 29 is just a clarificatory section. Section 30 to 36 are all the allowing sections. That means it gives you basically the list of items, expenditures which will be allowed to you as a deduction, and if it will be allowed to you as a deduction, how exactly, in what manner and what fashion that it will be allowed to you as a deduction. That is section 30 to 36. Okay, then section 37 to 43b, or you can say 43. Why just 43b? Okay, section 37 to 43 are basically disallowing section. They are basically a disallowing section. It will specifically tell you that these are the items or the list of compliances which you should do, and if you don't do that, it will be not allowed to you as a deduction. I repeat, it will be not allowed to you as a deduction. Okay, and thereafter last section is section 44, is more of a presumptive taxation and some more clarificatory provisions or something like that. Okay, now each and every section we will learn it as far as possible in this particular chapter from the barrack provisions. That is one of the point. Okay, so here see, with below each and every chapter I have given you this particular selected barrack provisions. I will use them as and when it keeps coming. I will explain to you each and every provision step by step, but I will explain you each and every provision with the help of the questions, and so that you will be able to identify that how exactly every section is to be applied in what circumstances. So I'll explain you each and every provisions, and I will also together with that explain to you how that particular provisions are to be applied in each and every question, how add less adjustment is to be carried out by virtue of that particular provision. And therefore these first few questions of the initial part of this particular chapter is going to be like what should I say, a mid-level kind of a question, not a very specific question, but these questions will help us to learn the actual application of the provisions, that how it is to be actually come and shot with respect to a question, and that is the main objective. So now let me start with this particular question, and each and every provision, this particular pages also you keep it open, your barrack provision, and together with that you keep this particular pages also open, which is our simplified version of the notes. Okay, so wherever it is required I will make a reference to you if required. So keep all these pages handy with you, and before I start the discussion. Secondly friends, all these questions, wherever it is an in detail question and all that, I may not do the question reading. So before you start with the classes, you finish the entire question reading at least 2 times. So you read each and every question, each and every word of that particular question at least 2 times. Okay, before you start learning with myself. Okay, now see this particular question. Let me start directly. This particular question is for one gentleman who is a retail trader of Cochin. Okay, he is a retail trader of a Cochin, and he has given you all the details of entire profit and loss, debit, credit, everything he has given to you. Okay, so you already know the net profit, and you already know how this particular net profit has been calculated or it has already been derived. Okay, so I can do both the ways. This particular question, I can take income minus expenditure and get the income under that business, or I can start with profit and loss, which is 50,000, and do add less adjustment and arrive at my income under the head business and profession. I will follow the most a practical method and most important method from the examination point of view. That is this method, which is profit and loss. Start with that particular figure, and thereafter you do add less adjustment at the respective places. Okay. Now, before I just go ahead, let me give you a very brief introduction and idea about this particular business income and some of the provisions. First of all, see, two basic definitions, section 213 and 236. Section 213 is the definition of the word business, and 236 is the definition of the word profession. However, not so very important, but all basic things I told you that I'm going to explain you everything right from the basics, and slowly I will take you to the advanced level. Now, business includes trade, manufacture, commerce. So you are a trading person, you are a manufacturing concern, or you are doing any other commercial activity, it's a business and it will be covered by this chapter. Profession includes vocation. Vocation is basically an ability of a person. I repeat, it is an ability of a person to do a particular work. Now, for example, a chartered accountant will be a profession, but if you say a tailor, shoemaker, or a carpenter, example, will be called as a vocation. And from the income tax computation, income under the head business point of view, it is the same. That means computation wise, it's the same head of income which will be applicable. So you call it as a profession or you call it as a vocation. It is under the head business and profession. Section 28, which is the charging section of this particular chapter, it starts with that following income, and every charging section will have a same to same method. Okay, and it is the profits and gains. Listen very carefully. The profits and gains out of the business and profession which is carried on by the assessee at any time during the previous year. Okay. Now, Supreme Court has already explained hardcore basics of each and every provision, and because there are so many judgments, so in the judgments they have already explained that every profits and gains basically means, or it is basically intended that it is profits and gains means it is income minus expenses. Okay. Keep that in mind. In other words, a gross income is never taxable as income under that business and profession unless and until otherwise there is a specific provision. So, generally speaking, this is how it is to be interpreted, the words. The law says the profits and gains out of the business and profession, etc. It means that you want income minus the expenditure. The intention of the law, I repeat, the intention of the law is never to tax. I repeat, it is never to tax the gross income. The intention of the law is always to tax the net income under this particular head, unless and otherwise there is a provision. Okay. Thereafter, friends, there are subclause 2, 3 and all that are all specific situations which I will take it up afterwards. Okay. Now, one more provision I want to introduce immediately at the beginning of this discussion itself. One second, but now see here, because it is a long barrack, no? So I'll have to scroll a little bit, and little bit extra time will go in the scrolling. Yeah, but don't worry, I will try to do this as fast and not waste time. Okay. Now see section 37(1). Very important piece of legislation. Very important piece of legislation. Section 37, subclause 1. Basically, it says that what are the kinds of expenditure, or what are the not kinds, rather, what is a concept of expenditure which will be tolerated by the law. Now, for example, I said that it is income minus expense. Okay, agreed, that income minus expense. Okay, but it is impossible, listen very carefully, it is impossible for any lawmaker in the world to give you the exhaustive list of all the expenditure which will be allowed or it will not be allowed. See, for example, business, you have employees, you have salary, you have maintenance, you have repairs, you have traveling, you have conveyance. There are so many types of expenditure, okay? But it is impossible that to come out with the exhaustive list that expenditure 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and it will be allowed as a deduction, or it will not be allowed as. It is not possible to have the list. So section 37(1) is an important piece of legislation which tells you that expenditure which should be allowed to you should satisfy some of the basic criteria which is provided by the law. Okay. Further, it says that any expenditure not being referred to under section 30 to 36, because section 30 to 36 are the specific sections under which the deduction are allowed. For example, interest on capital borrowed, it is one of the subclause of section 36. So if it is an interest on capital borrowed, then don't come to section 37(1), go to section 36, justify your claim and take the deduction, or not take the deduction. But now section 37(1) cannot be applicable because it is a specific situation under section 36. Okay. Not being a capital expenditure. Okay. Second condition or second point, that the capital expenditure is not allowed as a reduction. It is very, very natural thing, because normally on the capital expenditure, the capital outlay, you get a depreciation. Normally you get. So if you say, for example, you put your money into plant and machinery, it is a capital asset. So on that you get a depreciation. So section 37(1) will not give you any deduction for the capital expenditure. So you should know the concept of revenue expenditure and the capital expenditure. Or if it is a personal expense, so if it is any personal expenditure, again you will not get it. So you will say that you are traveling for your personal advantage, personal benefit, family tours, anything personal, your household expenditure, your household electricity bills are all personal kind of situation, which is not directly linked with your business. The personal expenditure will not be allowed